Two pieces of good news came in yesterday. First is inflation in Nigeria continuing to inch down, reinforcing the narrative that inflation rate may have peaked and that we may soon begin to see the Central Bank of Nigeria easing rates. And in the US, a return to positive US retail sales growth from last month's decline, which challenges the thinking that the world's largest economy is already in a decline. But of course, the sales growth we saw was still less than expected. Hello, welcome to Global Business Insights, where we analyze the main business stories. And let's go straight to the latest Nigeria inflation release. National Bureau of Statistics released inflation print showing it eased to 23.18% in February. Annual inflation in Nigeria fell sharply from 34.8% in December to 24.48% in January. That was after the rebasing, the first major drop in over a decade. This was the month after it rebased its consumer price index to reflect changes and weights in consumption patterns, as well as using a different base year. The February 2025 headline inflation rate showed a decrease of 1.3% compared to the January 2025 headline inflation rate. On a month-on-month basis, the headline inflation rate in February stood at 2.04%. Food inflation, which is a key driver, was up 23.51% year on year in February, compared also to 26.08% the month before. So another decrease there. At its first rate-setting meeting of the year, that's last month, the central bank retained the benchmark interest rate at 27.5% after 6 hikes last year, waiting to see what the inflation trend would be after the rebasing. Last year also saw the highest inflation print in 28 years after President Bola Tinubu acted to end costly subsidies and the devaluation of the naira currency. What we know is that benchmark interest rates are now real. That is, the interest rates are higher than inflation, which is good, and the central bank can find that it can begin to ease the high cost of borrowing if we do continue to see inflation trending down. To understand how to interpret inflation data, first is to see that this is a lagging indicator. It shows economic conditions that have already taken place rather than predicting future trends. The movement in prices typically results from prior shifts in supply and demand, wage growth, or monetary policy decisions. Do take some time before the impact of all those factors transmit into prices. Analysts observe that a key reason why inflation lags behind broader economic activity is because of this time that it takes for cost pressures to filter through different sectors. When businesses face higher expenses, there is a delay before costs are passed to consumers, as companies absorb some of the burden temporarily or adjust prices gradually. The result is that by the time inflation data shows a significant increase, the underlying causes have often been in place for months or even years. The same thing when costs begin to come down. It takes time to see the full impact. The challenge for central banks is to accurately gauge the transmission time of their policies. In Nigeria, as hiking of rates ceased or paused, the impact of previous hikes will still be in play for a few months, even after the pause. The imperative now is to gauge when best and how much easing to do without reversing gains in stabilizing prices. In the US, retail sales rose by 0.2% in February to $722.7 billion after the 1.2% decrease reported in January, but still lower than the market expectation for an increase of 0.7%. On a yearly basis, retail sales were up 3.1%. Retail trade sales were up 0.5% from January 2025 and up 3.4% from last year. The report from the Commerce Department suggested the economy continued to grow in the first quarter, though at a moderate pace, reflecting a cautious consumer. It showed sales at restaurants and bars declining by the most in 13 months amid the deteriorating sentiment. Analysts also said it elevated concerns that the economy already is shrinking. The risk of much weaker growth remains elevated as consumers hold back spending to build savings buffers in response to concerns about job security. Now for some business stories. US stocks gained for a second straight session on Monday as investors bought the dips, seeking gains or profits after the Nasdaq and S&P 500's 4-week tumble. The latest retail sales economic data was also a source of some relief to those concerned that the economy was in decline. Talking of dips, the Magnificent Seven is now trading at the lowest valuation premium relative to the rest of the S&P 500 since 2017. Despite consensus earnings expectations that the group will collectively continue to grow their earnings per share at a faster rate than most of the other companies. So you can join the dots. Google parent Alphabet is reported to be in advanced talks to acquire cybersecurity startup Wiz for around $30 billion. Wiz provides cloud-based cybersecurity solutions powered by artificial intelligence that help companies identify and remove critical risks on cloud platforms. It called off a $23 billion deal with Alphabet last year so that it could focus on its initial public offering. The deal, if it goes through, will help Alphabet tap into the cybersecurity industry and expand its booming cloud infrastructure segment, which generated more than $43 billion in revenue last year. Another deal brewing. Pepsico said it would buy prebiotic soda brand Poppi for $1.95 billion, expanding into the healthier soda category at a time when the company is battling falling demand for its traditional beverages and snacks. Shares of Pepsico were up 1.6% in early trading, and definitely there's a bit of good news there if that deal goes through. Governor Kazuo Ueda and his fellow board members are set to keep the policy rate at 0.5% at tomorrow's conclusion of their two-day policy meeting. A key focus of this week's meeting will be any signals from Ueda related to the timing of the next move, as well as any cautionary comments over protectionist trade policies and their potential impact. Also on central banks, investors are looking ahead to Thursday's Bank of England's policy decision and expecting a hold amid still sticky UK price trends. Markets have priced no change, also due to the clear messaging from senior policymakers that slow and cautious adjustments in policy are likely moving forward. US FOMC, that's the Fed Open Market Committee, that's tomorrow, also not expected to change their benchmark rates when they decide, but we will get updated economic projections, and that could be quite revealing. Audi plans to cut 7,500 jobs as the German car maker seeks to fund the challenging transition to electric mobility. The manufacturer, owned by Volkswagen, yesterday announced plans to axe around 8% of its workforce by 2029. The job cuts are part of a series of measures aimed at saving £840 million a year as economic conditions become increasingly tougher and competitive pressure and political uncertainties are presenting the company with immense challenges. UK Business Minister Jonathan Reynolds is expected to meet with US Commerce Secretary Howard Lutnick and US Trade Representative Jamieson Greer in Washington today to advance discussions on a bilateral trade agreement. Also in the UK, retailer Tesco says it is lifting pay for its store staff by 5.2%, but will scrap the extra pay for working on Sunday. The UK's biggest supermarket chain said the hourly rate will go up by 43p to £12.45 from 30th of March after reaching a deal with unions. It will raise pay again to £12.64 from the end of August, a little above the UK national minimum wage. However, Tesco will also drop the current 10% pay bonus for Sunday shifts for all staff. Egypt's President Abdel Fattah al-Sisi said that monthly losses of the Suez Canal revenues reached around $800 million due to Yemen's Houthis attacking vessels in the Red Sea. The Iran-backed Houthis have attacked vessels since November 2023, disrupting global shipping by forcing vessels to avoid the nearby Suez Canal and reroute trade around Africa, raising shipping costs. Meanwhile, oil prices were inching up yesterday as the US warned that Iran would be held responsible for future Houthi rebel attacks. Kenya and the International Monetary Fund are discussing a new lending program and abandoning the current one as the country struggles to get its economy back on track after high levels of borrowing led to a surge in debt servicing costs. The East African nation needs continued financial support from the fund to keep up with debt repayments that have accumulated as a result of very heavy government spending in recent years. In South Africa, the average inflation forecast for 2025 in a closely watched survey commissioned by the central bank fell further in the first quarter of this year, dropping below the level the bank aims for. The Bureau for Economic Research said its survey now expects inflation of 4.3% in 2025, down from 4.5% in the previous survey. The South African Reserve Bank tries to keep inflation near 4.5%, the midpoint of its 3 to 6% target band. Shares of China's BYD surged in Hong Kong after it announced a new technology that allows electric cars to be charged in 5 minutes, adding 470 kilometers in range, based on tests on its new sedan. That is as fast as the time it takes to fill your tank. MTN Group is spinning off fintech corporations in Nigeria, Ghana, and Uganda during the first half of 2025. This is part of a broader reorganization that will enable MasterCard acquire a minority stake in these high-growth units based on a deal struck in 2023. Asian markets were mostly higher as investors turned positive on the outlook for China, welcoming promises to further support domestic consumption. Gold prices were above the crucial $3,000 mark for the second time in a week as investors sought cover from many economic concerns and issues around uncertainty. Spot gold rose 0.2% to $3,006 an ounce early in the morning after hitting a record high of $3,017 per ounce earlier in the session. Global markets also on edge, focused on the phone call between Donald Trump and Vladimir Putin as the US pushes for a ceasefire and peace deal in Ukraine, also with a few central bank meetings later in the week. A ceasefire deal could imply reduced volatility, lower European gas prices, and a stronger euro. European stocks were also set to track Asian peers higher. Well, that's all we can take on this episode of Global Business Insights. We're on Business Day TV, Monday to Friday at 11 a.m. West Africa time. Thanks for watching. This is Bode Oshosani. Bye-bye.